right. All right. Thank you so much, ladies and gentlemen, for joining this amazing session. So in today's video, we're going to discuss about the opening range breakout. This is a strategy that personally I've grown to love because it's a very simple strategy that helps you to be able to understand what is happening in the market. And I know that it's just a matter of time when you guys get to understand this. It's going to help you to be able to take trades with a lot of precision, with a lot of calmness, because it is something that repeats itself on a daily basis. So what is the opening range breakout, or what is the ORB strategy breakout? So this is basically, the ORB simply means opening range breakout. It is a strategy that takes place every single day on all sessions. And of course, there's no strategy that is 100%, but of course, once you get to understand this, you're going to know that this is basically something that you can actually use to be able to trade, or to be able to take trades every single day. So now let's get started on this one. So now there are a few things that you need to understand when you're trading this opening range breakout. The very first thing that you need to understand is that the opening range breakout takes place every single day at the beginning of all sessions. Now, as we already know, we have like 4 sessions, 4 trading sessions every single day. So this is basically dependent on where you're tuned in from, where your time zone is. So for me, I normally trade the London session together with New York session, simply because I am my time zone is UTC +3 Nairobi. So if you don't know how to check on your session, or if you want to set your trading time zone, you just need to go to Trading View, and then down here there is what you call the time zones. You see, these are different time zones depending on where you are. So the very first thing that you need to do is make sure that you are on your correct time zone. For me, mine is UTC +3 Nairobi, so it's already selected there. But if yours is in Cairo, select Cairo. If yours is South Africa, select South Africa. So that basically so that now when you set up the indicator or anything that you're going to need, then you are setting it up according to the time zone that you're basically in. So now that is the first thing that you need to do. So the second thing that you need to do is find out what asset you want to trade. You want to find out what asset you want to trade, because we have different assets. You can trade as many, whatever asset you want to trade. But of course, for me, I normally trade gold, and of course, I also have some currencies that I also look at, especially Euro USD and also GBP USD. These are 2 currencies that I normally look at, but most of the time I normally trade gold. So once you select the session, the particular asset that you want to trade, you also need to understand that you will need 2 indicators. You'll need 2 different indicators, and the very first indicator that you're going to need is this one here. It is called Sessions by Lux Algo. Sessions by Lux Algo is an indicator that you're just going to click on it once, and then it's an indicator that is going to give you all different sessions that are available for you to trade, like all the sessions that are available for you to trade. And when you come to it here, like you go to the settings, you're going to realize that we have 4 different settings, yes, but now you choose the session that you want to trade. Of course, you can't trade all sessions, because that means you have to be awake 24 hours, or maybe just awake during that particular time when the session is getting started. So we have 4 different sessions. We have New York session, London session, Tokyo session, Sydney session. And the good thing about it is that you just need to bring it on board, and your time zone is correct, and you don't need to change anything else here. You don't need to change anything else. Maybe you're just going to tick or untick what you don't need. Like, for example, if you're trading London session, you can remove all these Tokyo and Sydney and New York, and just remain with London session. All right, so let me just show you. So if you just remove that, you're going to remain with only London session. As you can see, that is just London session. But if you're trading, if you want to, if for me basically, I normally leave 2 sessions on board: the previous session and the current session. Like, for example, right now here, if I want to trade London session, I will leave on board Tokyo session and London session. All right, that is what I will do, so that now I can be able to see what was the previous session high, what was the previous session low, because most of the time the market tends to go to the previous high or the previous low before it can decide to take any other direction. So for example, right now, as you can see, we are on the 1 hour time frame, and this was the low. This was Tokyo low, and this is Tokyo high. Okay, this is Tokyo high, this is Tokyo low. We are on the 1 hour time frame, so we just need to go to the 15 minutes time frame and take a look at what is happening. So this is now the first candle of the London session on the 15 minutes time frame, because according to sessions by Lux Algo, London sessions in Nairobi or in East Africa starts at exactly 10 a.m. right? So that means this is now the first candle of the London session, and this was the Tokyo high, this was the Tokyo low. So now this is what I want you to be very keen with. Most of the time, or sometimes, the market tends to take out the previous high before turning around, or it can just decide to like take out the liquidity and then continue in the same direction, break out above and continue in the same direction, or come and break out on the low, come and take out the low and then turn around. So that is basically why I always like having that particular sessions, the two sessions in the current session that I want to trade and the previous session, so that I can be able to identify the previous high, the previous low of the previous session. Okay, so once that is said and done, personally, I normally have two sessions every time I'm trading. So if I'm trading London session, that is what I'm going to have. I'm going to have London and Tokyo. If I'm trading New York session, I'm going to have New York and London session. All right. So that is basically what I'm going to have. That is what I'm going to have. Like, for example, you can see here, this was London session, and then this was the high, this was the low. And take a look at what happened here. When we opened New York, we opened right at the low, right at the low of New York session, and then now the market started going like right at the low of the London session, and then the market went all the way up. When the market took out the high of the London session, what happened? There was some kind of a dilly-dallying, then it started like retracing and stuff like that. So we have all this imbalance that basically there's a high possibility we want to like fill in that imbalance if the market is going to come back there, right? So that is something that you need to understand, that every now and then, every time you want to like have two, every time you want to like trade the ORB, you need to have like both two sessions, the previous session and the current session, so that you can be able to know the previous high, the previous low. Right, so that is where you're going to be getting that indicator from. Just go to the indicators tab, search for sessions by Lux Algo, and click on it once, and you're going to have it there. The second session, the second indicator that you need, that personally I feel like this is now an indicator that makes things simple, is the Smart Money Concepts by Lux Algo again. So you just click on it once, and the Smart Money Concepts is going to give you that. Like, it's going to give you the break of structures, change of characters, the equal highs, equal lows, and the supply and demand zones, right? So this is an indicator that you basically you just need, because it is going to give you where the market is heading to. Like, it's going to tell you now the market is heading this direction, the market is going to go this direction. Why? Because it has broken structure this direction, it has changed character this direction, so you need to like go this direction because of 1, 2, 3, right? So once you bring it on board with this, you also use it on default settings. You don't need to change your settings, but for me, I normally like to change the internal label, from tiny to normal or small, so that can be a little bit visible. You see, they are a bit visible right now. They can be a little bit visible so that I don't strain much, right? So with this particular indicator, let me just mention a few things about this indicator before we even get into the ORB strategy itself. So with this particular indicator, you're going to realize that this here is it's pink. If I'm good with colors, this is pink. I don't know if it is pink or whatever it is. This color together with this color, and then we have some kind of blue on the low. So this is blue, and then this is also blue. So with this blue, this basically shows that this is now your demand zone. This is your demand zone, that's your supply zone, and that's your supply zone. So we're looking at this market turning around from either here, then coming back to here, then going up there, then coming back like that. Like, these are areas that you're supposed to be looking out for buys. This is an area that you're supposed to be looking out for sells. This is an area that you're supposed to be looking for buys. This is an area that you're supposed to be looking for buys. Like, for example, when it printed this change of character here, it also printed this blue zone, meaning that if you're to continue in the same direction with this market, you have to wait for the market to come back here for you to start to set your entry. So this is something that is really, really helpful, because if you're struggling to get to understand where your demand zones are, your supply zones are, then that becomes easier for you to like know that this is now my an area that I'm looking to to look for an entries at. Then again, when you look at it carefully, you're going to realize that it also has this here that is a strong high and then a weak high. So why do we have the strong high up here and the weak high down, weak low down here? So basically that simply means what? It means that the market is on a downtrend. That is what it means. The market is on a downtrend. That is why this is a strong high, because we had a massive break of structure here on the higher time frame. So this was a break of structure on the higher time frame. That is why this is our strong zone, and then this is our weak low. Strong high, weak low. That is basically what it means. Yeah. So that means if the market comes all the way up here, there's a high possibility this market will want like now to start going down because it is on a downtrend, right? So we are breaking the low, we are breaking the low, we are breaking the low, we are breaking low, we are breaking low. That is basically why we have the weak low here and strong high above here. So if the market comes here, you can look for some short-term sells, like for a scalping. Comes here, then scalp all the way to this demand zone, then push all the way up, and then once it comes here, now you can decide to now go all the way down. Now again, you're not just going to get into the market around this zone to sell simply because the market is on a supply zone. No, you have to like look for your confirmations, find out what your confirmations are before you can decide to go into that market, right? So I believe you guys are getting what we're trying to do here. So let's now get into the strategy itself. That is now the ORB strategy. So for me, I actually nicknamed it as ORB plus SMC simply because it works best when you understand the smart money concepts together with, when you couple up the smart money concepts together with this strategy, the opening range breakout. So how does it go? Here are a few things that you need to understand. That for you to be able to trade the opening range breakout quite well or impressively, you need to go to the 15 minutes time frame. The 15 minutes time frame of every session, like 15 minutes time frame of the session. So just got the 15 minutes time frame. Of course, getting to understand that you also need to know the direction of the market. The daily bias is also very, very important. For me, it's key, right? So daily bias is also very important. But again, you can also just decide not to put into consideration the daily bias and just stick to the ORB plus SMC on the 15 minutes time frame, and that's it. So let me just increase this candlesticks just a little bit here so that you people can be able to understand. So now, what do we do? What's the first thing that we need to do? Of course, we've talked about the indicators. We're not going to repeat that. But now the most important thing that you need to do is that every time the market is opening up, at the opening up of every session, the first 15 minutes time frame. Some use the 5 minutes, some use the 3 minutes, not 3 minutes, but some use the 5 minutes, some use the 15 minutes, and there's some others who use the 30 minutes. But for me, my all-time favorite is the 15 minutes time frame. So the first 15 minutes time frame, what you need to do is you need to like mark the high and the low of the first candle. And the reason as to why we bring on board the sessions by Lux Algo is to ensure that it marks out the first candle for us. Like this is the first candle of the 15 minutes time frame on the 15 minutes time frame of the London session. All right. So let's go back a little bit so that now we can see what is happening. So once you mark out the high and the low of the first minute candlestick, then you go to the 5 minutes time frame and wait for the market to break out. You see now, the market has to break out with a body, right? Once the market breaks out with a body, then two things will be involved. Either you're just going to go in aggressively, or you're going to wait for the market to retrace for you to take a trade in the same direction of the breakout conservatively, right? So what you need to do is just go to the All right. Sorry about that. Okay. So we continue. So what I was trying to say is that for this particular trade, what you need to do is, first of all, you need to mark the high and the low of the first 15 minutes candle, and then go to the 5 minutes and wait for the market to break out. Whatever direction the market is going to break out to, it's okay. You're just going to go in that same direction. Okay, so for example, this one here is a 5 minutes candle. So we're waiting for this candle to close. And once this candle closes, then now you are going to look left. You see, when this candlestick has that candlestick has just closed. So two things are going to happen. Number one, either you're just going to go in aggressively and put your stop loss slightly below here, and then target 1:2 risk to reward ratio, or 1:1.5, or 1:2, 1:5. 1:1, 1:2. Basically, I normally look at the 1:2. Yeah, but what you need to understand is that you need to put your stop loss on that range. Yeah, that range, and then do 1:1 or 1:2. Basically, 1:2 is the best. Why do we say 1:2? Because at least, you know, when you're risking 1:2, it becomes much easier. But for me, the reason as to why I bring on board these sessions by the smart money concept by Lux Argo is that I need to know what happened previously as the market was opening up. So when you look at this one here, you're going to realize that that this particular market, we have this this fair value gap that is right here, that fair value gap that is right there, and then we are also going to realize that we also have this demand zone that has been given to us by Smart Money Concept by Lux Argo. So this is actually an area. Sorry, I think my network was a bit tricky there. So this is basically our area of interest. This is like an area that we're looking for the market to come down to before anything happens, right? Why? Because we have two things. We have, number one, we have this fair value gap. So let's just type it up here. We have this fair value gap here. That's our FVG. And then we have this 5 minutes demand zone, this one here, that has been created for us by Smart Money Concept by Lux Argo. So this is like a demand zone, or basically our buy zone. So for me, I normally just do that. That's now where we're supposed to be looking for the buys at. So two things: either you can buy around this area, or you can buy around this area. But sometimes when the market breaks out like that, it just doesn't come back to this area. All right, so that is basically why I have placed this entry here. That's the aggressive entry, and we're targeting 1:2 risk to reward ratio, and our stop loss is right here. But in case this market breaks below and goes all the way, we can decide to like either take our entry on the 50% of that fair value gap, or just wait for the market to come back to the extreme zone, our demand zone, and then of course we place our entry there. So this is going to be like our ultimate entry area, or optimum entry zone, this particular one here. But of course, if the market decides just to break out and it goes all the way, we still have an entry for that. So the reason as to why we have placed a stop loss here is to ensure that at least we know that in case this market decides to go back, then we are going to take our entry, a better entry here, targeting 1:2 again. Or this one is actually going to be much bigger, because our target is going to be like on that supply zone, the most extreme supply zone. But again, remember, we're going to be also taking partials on the 50% of this particular entry in case the market comes back here. So right now we're looking at either taking the entry direct from there, that is now the aggressive mode, and the conservative mode, you have to wait for the market to go back to the fair value gap or the demand zone, that is the extreme demand zone, because of that change of character that we've just seen right there. So we are going to go back to that, we are going to come back to that, but in the meantime, let us take a look at what is happening, what happened on the previous sessions, looking at the same. I'm just going to give you a few examples as we wait for that market to play out. So looking at this one here, we're going to come back to that. So looking at this one here, this was London session. This was London session on the 15 minutes time frame. So the strategy says you mark the high and the low of the first and the second of the first candle on the first 15 minutes candle. So that is now basically the high, and then we have the low down here, and then we go to the 5 minutes and wait for the market to break out. We go to the 5 minutes breakout. So this is it. So our breakout took place on this candle. This is where the market broke out and closed out at. So let me just set this one up. So we had a breakout here. So once the market breaks out, you can decide to go in aggressively. And of course, remember, your stop loss is supposed to be slightly a few pips below that range. And then you're targeting 1:2 risk to reward ratio. So our 1:2 hit profit right here. This is where the market hit profit at, right here. So yesterday, that is New York session yesterday, the market worked out pretty well, and you can see we hit take profit there. So right now, like I said earlier, I'm going to come back. So this was like the aggressive mode. Again, if you got the 5 minutes time frame, you're going to realize that this here, we did not have see any kind of break of structure before, like the one that we've just seen right now. But you can see that this was basically an area of interest where the market like pulled out to and then came back down here. So we could have just taken the entry on this. On the conservative mode, our entry would have been on this particular candle because it gave us what we call the sell to buy order block. So that is basically where we would have taken our entry from. Again, from this change of character, you can see that the market was expected like to do some kind of a retracement back to the demand zone. And that is where we are right now. It has not come down to this demand zone, but at least it has given us a few more change of characters. So if this market comes back down here, this would actually be your best entry, because on the previous session, this was clearly our low. Like this was our low, and then we also have this massive fair value gap on the high time frame that we're expecting the market to come down to. So that is New York session. And then let's take a look at also London session again yesterday. And when we talk about yesterday, we're talking about 17th of July. 17th of July. So the first candle, the first 15 minutes candle, make sure that you're on the first 15 minutes candle. Again, you can see the first 15 minutes candle here was basically this one. Here we are. This is where we are. So the first 15 minutes candle is that one here. That's the high and that's the low. And then we had a breakout here. So let's go to the 5 minutes time frame. Our entry is always on the 5 minutes time frame. Don't forget that. So here we are. So that was where the breakout took place, right? So this broke out here and then closed here. So we are getting entry on the next candle. So the next candle was that one. And then our stop loss is on the range, targeting 1:2 risk reward ratio. 1:2 risk reward ratio, there it is. So the trade actually took hit take profit right here, right? That is where the trade hit take profit at. So that is basically how you are going to be looking at this session. Please understand that it's not going to work every day, but from my back testing, from the few videos that I've done on this, especially on my TikTok account, this strategy is basically fire. It is basically fire, and it works pretty well. And I can tell you for a fact, you just need to practice, and with time you're going to realize that this is actually a strategy that is worth mastering, a strategy that is worth mastering. So again, don't forget that this is just a recap and also a strategy video showing the strategy, how it works and all that. And you feel free to like go ahead and do your own research, do your own backtesting, so that you can be able to understand how best to go about this one. From me to you, I just want to wish you an amazing day. That has been my time, and I just want you to, if you're new to this channel, don't forget to subscribe. Don't forget to like, share, comment, and of course, this is just the very first video we are doing on this channel, and I'm sure it's going to be worth your time. So just go ahead and subscribe, share, like, leave a comment, and tell me, just let me know what kind of videos that you guys would want to like see more on my channel, so that we can be able to learn from each other. Remember, this channel is all about learning, and it's going to give you the best of content in terms of forex trading and all that. See you on the next one. Subscribe, share, like, and let's connect on the next one. Bye bye.